In 216 BCE, panic grips Rome as Hannibal's elephants thunder across the Italian countryside. But in the sacred temple of Saturn at the heart of the Forum, something remarkable happens. Citizens clutch leather pouches filled with silver denarii and gold ore, rushing not to flee the city, but to deposit their life savings in the temple's basement vaults. These aren't just places of worship, they're the world's first banks. Priests in white togas carefully record each deposit on wax tablets, while armed guards patrol marble corridors lined with bronze strongboxes. The Temple of Saturn alone houses Rome's entire public treasury, the aerarium, containing millions of sestertii that fund legions marching across 3 continents. But how did ancient Romans create a banking system so sophisticated it rivals modern finance? How did temple priests become loan officers, and why did Romans trust their gods with their gold? The answer begins with a simple problem. Where do you safely store money in a world without vaults, insurance, or police? Roman temples solved this puzzle through divine protection. Thousands of temples across the empire served as repositories, from the grand temple of Juno Moneta on Capitoline Hill to modest shrines in distant provinces. Temple banking worked because of 3 revolutionary principles: divine security, who would rob the gods; professional management, priests kept meticulous records; and geographic distribution, spreading risk across multiple locations. But the real genius lay in what these temples did next. They began lending money at interest, creating the world's first credit system. Walk through Rome's bustling Forum Romanum in 100 BCE, and you'll encounter a sight that would be familiar to any modern financial district. Rows of money changers sitting behind wooden tables, bronze scales gleaming in the sunlight, surrounded by the constant clink of coins and the rapid-fire negotiations of high-stakes finance. These are the Argentarii, Rome's first professional bankers. Their Latin name means silver men, and they've revolutionized how the empire handles money. Marcus Crassus, Rome's richest citizen, regularly conducts business with these financial experts who can instantly calculate currency exchanges between Roman ore, Greek drachmas, and Egyptian tetradrachms. The Argentarii perform miracles of logistics that seem impossible for the ancient world. A merchant in Rome can deposit 1,000 denarii with an Argentarius and receive a written order, a prescriptio, that allows his partner to withdraw the equivalent amount in Athens without transporting a single coin across 800 miles of bandit-infested roads. This ancient check system makes Mediterranean commerce possible on a massive scale. But here's what makes the Argentarii truly revolutionary: their codices. These leather-bound ledger books record every transaction with dates, amounts, and parties involved. Roman courts accept these records as unquestionable evidence in legal disputes. The Argentarii have created the world's first reliable financial documentation system. Each Argentarius specializes in different services. Some focus on currency exchange, charging a small fee called collabus for converting foreign coins. Others concentrate on loans, carefully assessing borrowers' creditworthiness before extending funds at interest rates that would make modern credit card companies blush, sometimes 48% annually for risky ventures. The most successful Argentarii become power brokers who finance everything from gladiator games to military campaigns. But even they face a challenge that threatens Rome's economic stability. What happens when entire social classes can't repay their debts? 352 BCE brings Rome to the brink of social collapse. Thousands of plebeians, common citizens, face enslavement under the brutal Nexum law that allows creditors to claim debtors' bodies as payment. Desperate families sell children to cover loans, while patrician creditors demand ever higher interest rates from increasingly desperate borrowers. The crisis demands desperate measures. The Roman Senate makes an unprecedented decision. They create the world's first government-backed banking system. The Quinquevirii mensarii, 5 public bankers appointed by the state, establish offices with full authority to intervene in Rome's private credit markets. These mensarii operate with extraordinary powers. They can accept property as loan collateral, determine fair valuations for assets, and most remarkably, use public funds to pay private debts for citizens who can provide adequate security. For those who cannot, the mensarii arrange dignified property transfers to creditors, preventing the social chaos of mass enslavement. The system works brilliantly. Within months, Rome's debt crisis stabilizes as the mensarii create orderly processes for handling insolvency. They maintain detailed records of all transactions, becoming trusted intermediaries whose decisions carry the full weight of Roman law. But the mensarii face a problem their private counterparts don't: political pressure. During the Second Punic War in 216 BCE, the Lex Minutia creates the Triumviri Mensarii, a three-person commission that operates continuously for 6 years, processing thousands of debt cases while Hannibal devastates the Italian countryside. Named mensarii like Gaius Duilius and Publius Decius Mus become household names across Rome, respected for their integrity in managing both private financial disputes and public economic policy. Their success proves that government intervention in banking can stabilize entire economies, a lesson that won't be fully appreciated again for over 2,000 years. In the basement of the temple of Juno Moneta, the goddess of memory and mother of the muses, an intricate process unfolds daily that keeps the Roman economy functioning. Slaves work bronze dies, stamping out thousands of fresh sestertii, while nummularii, officers of the mint, inspect each coin for weight, purity, and perfect impressions. The nummularii serve as the final link in Rome's banking chain. Their primary responsibility involves testing new coins for quality and authenticity, but their role extends far beyond simple mint operations. They operate specialized banks that introduce fresh currency into circulation, while removing worn, clipped, or counterfeit coins from the money supply. This process requires extraordinary skill. An experienced nummularius can detect subtle differences in coin weight that indicate silver content has been reduced by unscrupulous moneyers. They test gold ore by scratching them against touchstones and comparing color reactions with known pure samples. Counterfeit detection becomes an art form that saves Rome's economy from monetary chaos. But the nummularii face a complex challenge. How do you replace millions of coins across an empire stretching from Britain to Syria without disrupting commerce? Their solution involves coordinated exchanges with local Argentarii and mensarii, creating a network that can simultaneously introduce new currency and withdraw old coins from distant provinces. During the reign of Augustus, the nummularii process approximately 50 million new coins annually, each requiring individual inspection and authentication. They maintain detailed records of metal content, dye usage, and distribution patterns that allow Roman authorities to track money supply and detect counterfeiting operations across 3 continents. The nummularii also serve as the empire's early warning system for economic problems. When unusual numbers of clipped or counterfeit coins appear, they can alert provincial governors to potential organized fraud. When foreign coins suddenly flood certain regions, they recognize signs of military campaigns or trade disruptions that require government attention. By 50 BCE, Rome has created something unprecedented in human history: a continent-spanning credit system that allows a grain merchant in Alexandria to finance his operations with a loan from a banker in Gaul, while a pottery manufacturer in Britain can accept payment orders drawn on accounts in Syria. This financial revolution transforms how Romans think about money itself. Wealthy citizens like Cicero routinely conduct business without touching physical coins for months at a time. Instead, they rely on sophisticated networks of Argentarii who maintain running accounts, process written payment orders, and provide detailed monthly statements of all transactions. The system's sophistication rivals modern banking in many respects. Roman bankers offer different account types: vacua pecunia, demand deposits that earn no interest but remain immediately available, and interest-bearing deposits that bankers can lend to other customers. They calculate compound interest on long-term loans, maintain reserve ratios to ensure liquidity, and even develop early forms of insurance for high-risk ventures. Credit letters revolutionize Roman commerce by eliminating the dangers of transporting large amounts of precious metal. A merchant traveling from Rome to Gaul need only carry a small written order from his Argentarius to access funds deposited hundreds of miles away. The Argentarii network has created the ancient world's first international banking system. But the true measure of Roman banking sophistication lies in its integration with government finance. The aerarium in the Temple of Saturn doesn't just store tax revenue. It actively manages imperial cash flow through complex lending arrangements with private Argentarii who can provide short-term liquidity during military campaigns or public works projects. The scale becomes staggering during Julius Caesar's Gallic Wars. Roman bankers finance everything from soldiers' equipment to siege engines, while simultaneously managing currency exchanges that allow Roman commanders to pay local suppliers in acceptable foreign coins. The Argentarii essentially create the financial infrastructure that enables Roman military domination. In a Roman banking house, the most valuable possessions aren't gold or silver. They're the leather-bound codices that record every transaction with meticulous precision. These books represent something revolutionary: the world's first comprehensive financial documentation system that courts, customers, and competitors all accept as absolutely reliable. An Argentarius named Lucius Caecilius opens his morning codex and reviews yesterday's entries. Marcus Tullius deposited 500 denarii. Gaius Verres withdrew 300 denarii via prescriptio to Athens' correspondent. Interest payment received from Publius Clodius 15 denarii on outstanding loan of 1,200 denarii. Every transaction includes dates, amounts, witnesses, and cross-references to supporting documents. These records serve multiple crucial functions. In Roman courts, properly maintained banking codices carry more legal weight than witness testimony. When Cicero prosecutes Verres for corruption, he presents Argentarii records as irrefutable evidence of illegal financial transfers. No one questions their accuracy, because the bankers' reputations depend on absolute precision. The codices also enable sophisticated credit analysis. Before extending a loan, Argentarii consult records of potential borrowers' previous transactions, payment histories, and current account balances. They maintain detailed profiles of customers' financial behavior that allow them to assess creditworthiness with remarkable accuracy. But the record-keeping system creates accountability that extends beyond individual transactions. Banking guilds regularly audit their members' books, ensuring that proper reserves are maintained and that lending practices meet professional standards. Argentarii who manipulate records or extend excessive credit face expulsion from their guilds. Financial death sentences in a business built on trust and reputation. The sophistication reaches its peak during public auctions, where Argentarii serve as official transaction processors. They record bidders' identities, track winning bids, arrange payment transfers, and document property transfers with precision that prevents disputes and fraud. Their presence makes large-scale commerce possible by providing trusted intermediaries who guarantee transaction integrity. As Germanic tribes overrun the Western Roman Empire in 476 CE, something remarkable survives the political collapse. The banking innovations that Rome created continue to shape European finance for the next millennium. Medieval Italian banks in Florence and Venice, consciously model their operations on Roman precedents preserved in ancient legal texts. The impact extends far beyond mere historical curiosity. Roman banking principles, written contracts, interest-bearing deposits, currency exchange, credit letters, and detailed record-keeping provide the foundation for every modern financial system. When we deposit money in a bank today, use credit cards, or transfer funds electronically, we're employing concepts that Roman Argentarii perfected 2,000 years ago. But perhaps the most important Roman banking innovation was the least visible: the creation of financial trust on a continental scale. Roman bankers demonstrated that strangers separated by thousands of miles could safely conduct complex transactions using nothing but written promises and professional reputations. This trust system enabled economic integration that wouldn't be seen again until the modern era. A Roman citizen could travel from Britain to Egypt carrying only banking letters, confident that local Argentarii would honor obligations contracted in distant provinces. The empire's political unity created financial unity that made Mediterranean-wide commerce profitable and efficient. Modern banking faces many of the same challenges that confronted Roman financiers: how to maintain liquidity while extending credit, how to prevent fraud while facilitating commerce, and how to balance private profit with public economic stability. The mensarii system, government-backed bankers who intervene during financial crises, directly anticipates modern central banking and deposit insurance concepts. The Roman banking legacy reminds us that financial innovation isn't just about technology. It's about creating systems of trust, accountability, and professional standards that allow strangers to safely exchange value across vast distances and time periods. In our digital age, we're still solving the same fundamental problems that challenged those ancient money changers in the Forum. When you consider that Roman bankers managed to create reliable international finance using only handwritten records, bronze scales, and personal reputation, their achievements seem even more remarkable than our modern electronic systems. What do you think was more important in creating Rome's financial success? Their technological innovations like coin standardization, or their social innovations like professional banking guilds and legal frameworks for credit? Let us know in the comments, and if you like the video, give it a thumbs up and subscribe to our channel. See you in the next video.